Hey traders and investors, it's Serge Berger here. What we're going to talk about today is the upcoming earnings seasons and how we can really profit from a tremendous potential that earnings season always brings about. So to that extent, let me first clear up a couple things. First of all, earnings season. Some people think you have to really sit out the whole earnings season and not do anything at all because it's way too choppy. I would disagree with that. I always find great opportunities during earnings season, and in fact, some of the better opportunities that I find all year tend to be during earnings season. And I will be talking about, and this we'll be doing tons of trades with subscribers during this earnings season, and hopefully make a lot of money. The second thing is a lot of people think the earnings season is a time to sort of front running earnings announcements. So what they try to do is they go in and they sort of make some sort of big outsized bet on a potential outcome of an earnings announcement, and that's really gets me to the crux of today's talk. And that's really just not the way to trade it. Okay, earnings season, the way you trade earnings season, if you're using stocks, if you're using options, and you're an absolute expert, and I mean an expert in options, and you see some of the skews that are irregular going into earnings season and all sorts of stuff, then you might be able to do a couple of front running of the earnings announcement. But other than that, and even that is not very high probability. Much higher probability is to do trades in the direction of so-called gaps. It's one of the types of trades that I'll be focusing on with subscribers and doing for the portfolios that I manage. As well, of course. So if you just look at Facebook, and I'll give you an example here. So Facebook, the big example I can give you here was from last summer in July. The stock came out with earnings during the earnings season at the time. And you can see it really gapped higher very strongly. Some people went in and decided to either short the stock or make some other weird bets. Unless they were long the stock going into it, they really got absolutely destroyed. But the much easier trade, where you break no sweat over, is literally you come in the next day, once the stock has reported, let it settle a little bit for half a day, see what's happening, and if the stock holds up in a really good up gap, or if you want to short the stock in a down gap, that works well, but it has to be a meaningful gap. Really like 5 to 10% at least. If you see that kind of thing happening in a direction, there's a really good chance the stock will continue in that direction for about 5 to maybe 10% over the ensuing, say, couple of weeks. That's a very high probability trade. And an easy one to do that doesn't really take a whole lot of sweat, particularly because a lot of times you have very defined risk as well, because you know where to get out if the stock starts slipping into the earnings gap. Then really you might as well just get out. So that's one type of trade that we'll be looking at this earnings season. But again, the point is not to speculate on a stock on a specific outcome and place a trade before the earnings come out. Wait for the earnings to pass, and if the stock does something meaningful, if it really moves, like I said, 5 to 10% in either direction, then you have a much higher probability trade to be setting up. If you're interested in any of that, you can join us at thesteadytrader.com for the trade alerts. Otherwise, if you've got any questions, as always, you can hit me up on Twitter, where my Twitter handle is SteadyTrader. Take care.